Let's talk about the market.
All right. It's tough,
It is tough.
but it's a lot of opportunity, for the people that couldn't get an offer accepted a year ago when they didn't want to pay 30, 40 grand over asking.
Yeah.
They didn't want to waive their inspections and have appraisal gap contingencies and close in 10 days, So, I still think there's a lot of opportunity. I just got a text when you got up. We just got an offer accepted they put in last night. It was I think they put in 5 or 10 grand under asking. You wouldn't have done that a year ago.
No.
And that's with seller page. So, it's tough, but there's a lot of opportunity for people, I think. It's just having those talks and those conversations with people about, historically speaking, what's happened in the market and, what it's projected to do. And, are you able to suck up a higher payment until you can refinance? Or would you rather just keep paying $2 grand a month in rent and paying somebody else's mortgage, So I think today, I think it's a good time to buy. I know the arguments against rates, but I think there's a lot of advantages as well.
Definitely. So for those of you that don't know, I'm here with Corey Grace, Guaranteed Rate, and a wealth of information with the mortgage process. Well, but so tell me, what are you coaching clients on? Hey, that's the biggest hiccup that we see right now is buyers saying, I'm going to wait until rates come down. And kind of what we're saying is there's less competition now than there's going to be in the spring.
Yeah.
And that's always going to be the case. But even now, are you telling people like, hey, get your rate, refinance in the future?
100%. Yeah. And I'll even go over, it used to be, I've been doing this over 20 years. I'd say for the last year to 3 years ago, that time gap, or 4 years ago, my client conversations were probably 10 or 12 minutes. Post app, that's going over, a couple options to meet their goals, giving them that. Now my client calls, I think the conversations are 30, 35 minutes. People are wanting to meet again in person, so that's cool.
It's a huge decision for them. So,
well, it is. It's back to where it was 10 years ago, where they wanted to talk about it. We went through this in 2008, 9, 10.
Yep.
So, we've seen it and we've come out of it stronger, I think. The conversations are more just about what makes the client happy. Why didn't they find a house 2 years ago when they were shopping, or a year ago? Didn't want to pay extra. The multitude of different things. We offered on 12 houses, got frustrated. So I think it's just having those conversations, giving them projected payments with future taxes, estimated insurance, and then we'll even look at it and say, okay, let's say if you get 1.5% lower rate, in a year and a half, can you stomach that payment? Here's what the projected payment would be at that point.
sure.
Let's say 2 years later they go down again. Here it is at that point, and they say, oh, what's the likelihood? And it's like, well, I just go off history, and I have plenty of clients, where I refinance them every year. But the key is to do, financially smart refis where it's cheap cost, and that way you don't have a bunch of sunk fees. So
Sure.
I think that kind of opens up clients' eyes and saying, okay, yeah, that's a little bit more affordable, But of course, you still get the client that they don't want to pay $1,600 on a mortgage and they got a $970 car payment,
Right.
or a truck payment. You're like, well, you gonna sleep?
Priorities, right?
Yeah, right. So it is what it is.
Are you seeing more, I'll call it alternative products than conventional? People doing ARMs?
I am not really. ARMs, to me, I used to have a lot of great ARM products. I used to be a big ARM pusher. I have, and that's for ARMs, I consider good ARMs 7 and 10-year fixed ARMs, 15-year fixed ARMs. So what happened with the banks, with the T-bill going up and everybody pulling their money out of the banks and putting them with the government, it really shrunk up the ARM business. A lot of my good ARM lenders that were really, really strong during COVID and stuff, their ARM rates are higher than fixed rates. And all that is telling you we don't want to lend. We can't lend money right now. If you watch the news or anything, the big conversation piece is these liquidity litmus tests that they're going to have banks do and stuff. So there's a lot of pressure on banks right now as far as sustaining a really strong cash position. Any really attractive ARM lender out there right now is probably going to have some cash issues once these tests come out and once their auditors get done. So that's something to be concerned with. I'm doing more recently I've had some buyers where I can qualify under a certain amount of income where I can get them some rebates, some CRA, some community reinvestment area rebates, whether that's guaranteed rate. We have a $2,000 grant for some buyers, and we also kick in another grand. So two borrowers I locked in earlier. We used $3,000. We bought down the rate for it. It made the payment where she wanted it to be. That same house, that same client was also working with another lender prior, and they couldn't get her to do it because the payment was so high. They didn't have those options. So we're doing a lot of that kind of stuff. Kind of tricky financing. Yeah, it's buying down a rate, but theoretically I'm paying for it because of the grant that we're doing.
Sure.
So it's, which those conversations can be a little bit more difficult to talk about with a first-time home buyer sometimes, but that's where the extra time piece comes in. But it's all about comfort level, I think.
Yeah, I just had a client that was looking at building with Ryan. NVR Mortgage, obviously, offers huge incentives.
Yeah.
They're like, yeah, we'll pay $16,000 towards closing costs and prepaids. And I was like, what?
Yeah.
So things are tightening up.
It's the most frustrating thing for a lender.
Oh, I'm sure.
I've had borrowers where I've helped put them through credit repair. I've paid for their credit repair.
Right.
And then all of a sudden they go buy a home with a builder, and they're like, well, they're giving me $12,000. You can't, but it's. And the buyer can't go to them and say, I want $12,000 off the price. I'm using my own guy.
Right.
They don't do that.
They handcuff you that way.
Yeah. It's the most frustrating. In my business, that's the most frustrating thing in the world.
All right. So you just sat through, I don't know how much of the class you were just in with Kent.
Yeah.
Talking about seller financing.
Yep.
Talk to me from the loan officer's perspective. How do you feel about seller financing and lease options versus land contracts, et cetera?
I don't think we'll get into a market of lease options and stuff like that. I think there's too much risk for sellers. I mean, at that point,
it's something crazy.
As far as a lease option, at that point, if I was a seller, I'd just rent you the house. I don't want to do a lease option.
90% of them fail.
Yeah, exactly. So what you're seeing more is, as far as what I was in their meeting, was about 2-1 buy downs. I did not know, when Kent called me yesterday, I didn't know houses were starting to shit a little bit. Just because with what I see,
it's in pockets. It's weird.
Yeah,
it's not everywhere.
Yeah, so the contract I just got in here, apparently that's been on the market for 10 days. I didn't know about it.
10 days is so long.
Oh my gosh.
Remember when it was 120, 150?
Yeah, right. So, it's either, your options are, from an agent perspective, you're either dropping a price, doing more marketing at a higher price, giving financing incentives, offering to pay, whatever that dropping price is.
Are you seeing more clients get away with asking for closing costs?
Now more than prior, yes.
Sure.
The contract that I just got, that was required to have seller pays. So from there, it's, the conversation with the buyer is, hey, do you just want to use the seller pays to reduce your costs, reduce your out-of-pocket? Do you want to use it to buy down interest rates for the next 2 years, 1 year, 1.5 year, half year? By that, there's 2-1 buy downs, meaning if you're at 7.25% this year, you could buy it down 2%, the seller can. For the first year, it'd be 5.25%. The second year would be 6.25%, and then at the third year, it goes back up. The expectation or the gamble is when do you refinance?
Right.
If rates all of a sudden drop, if we did that right now and rates drop 10 months from now, to 4.5%, you're going to be like, rats,
Yeah.
So there's some things there. Or does the buyer just want to say, hey, I just want the house the lowest price I can get it, because that's going to be what my property taxes are based off of eventually. So there's multitude of different items there. I think a lot of it's just, having a lender that you trust, and just, realtors, it's tough right now, I would imagine, for realtors, like a lot of people know enough to be dangerous. Some think they're lenders or whatever. It's just, have a trusted person that you work with that's going to get the thing done. Not just get it done, but get it done the way the client thought it was up front,
That is the most important thing.
Yeah.
I see too many lenders that, if it seems too good to be true, it probably is.
Correct.
Making promises that they just don't deliver on.
Yeah.
And that's why I think it's so important to have a lender that is going to get you to the closing table.
Yeah.
Because ultimately that's the goal. And so, is there a lender out there that's maybe a quarter point lower?
Yeah.
Probably. You're always going to find those. You're going to find the online ones and stuff like that. But you're not getting the service. You're not getting ultimately to the closing table. When you find out the day before closing that you're not able to close because they missed something, worst feeling in the world.
And I'm telling you, it happens all the time.
Sure.
It's just with, you see it, I see it, because I have piggyback deals and things like that. And I'm just, and The biggest thing is, well, I always preach local. I do the same with insurance agents. You know, why do you want to call, somebody in Texas or whatever in California for your insurance? Your house burns down. You want somebody that you can go sit in front of their office and help get it fixed. It's just accountability is huge. You know, if they're not answering your phone and your phone call during the day and taking 2 days to get back to you, it's probably how it's going to be during the loan process too.
Just got a giant scratch on one of my cars and text the insurance agent on Saturday morning, got a response back, and he's like, hey, set you up.
Yeah. So it is what it is. And service level to me is most important. I always tell buyers, when they're talking to people, they're asking, what should I be asking? I'd be like, it's not so much what you want to ask. I mean, everybody's going to be somewhat similar. It's just as long as you're getting honest information up front, but you got to figure out who you trust to get it done and who you want to work with.
Yeah.
And they always get kind of taken back at that. And I'm like, hitting on that's supposed to be me. It's rhetorical. Come on. But.
Well, it's the old adage. Mark Berger in my office in Beaver Creek says it all the time. I'd rather turn you down than let you down.
Yeah.
And unfortunately, it's the harsh reality of it.
Yeah, that's true. Very much so.
Any last minute words of wisdom for agents trying to get deals done?
Take the VA deal. VA financing is easy. It's awesome. Don't be scared, even though it says government. It's not FHA. I'm get too many agents who are like, well, I got conventional, VA. I'm like, VA's awesome. I think VA's easier than conventional a lot of times. So work with somebody you trust. If you have if you need second opinions or have questions on anything, feel free to call me, email me, whatever I can do to help you. I'm here for you.
Awesome. Corey, thanks so much for joining.
Absolutely. Appreciate it.
See you next time.
As always. Thank you.